Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. Welcome to Rich Keys Trading Channel. Today is Friday, the 30th of January 2026. It's the end of the month, and as usual, I will be looking at all the monthly charts for the analysis that I'll present today as well as over the weekend. I just want to provide a little bit of observation that I've made on the US 10-year. Um, and this is a 3 month chart. Okay, so I was just looking at a long term frame of the pattern that I can locate on the 10-year. So you observe that back all the way till probably 1948 down to 1960, the yield was rising rapidly. And of course, I'm pretty sure there was a lot of world events that drove, the yield higher to this level all the way to 1981, where the yield was as high as almost, is that 15,000? Yeah, it's amazing. All right, so from this high, we came down from the lower high, came down from the lower high, and we have been in a downtrend generally until 2020 pandemic, all right, April 1st, 2020, pandemic hit. And from this point onwards, we've seen the yield rising. Okay, so we all know that generally a rising yield also do correspond to a rising dollar. And I was trying to see the correlation. So except for when there were unusual events, the rhythm was pretty much in sync. That when the yield was rising, the dollar was also rising. Now, I do see right here, as we observing, that the yield has been rising since 2020. And the dollar also did rise from about this same period until where we are now, where it's facing a little bit of a headwind as to whether it's going to collapse as people think it's going to go to zero. I differ on that opinion. I think the dollar is going to go up from here. We might get a little bit of a pushback into the 50 EMA on this chart here, which means yield are likely to fall from this resistance zone into this EMA level, but find support from here. And its intended target is somewhere around 61, 68. And why 61, 68? Because of this is a falling wedge, so you've been falling, 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 falling. This is your resistance trend line. We broke it somewhere around 2022, and we have been above it since then. Now, these falling wedges are quite powerful patterns. They have a 60 to 70% chance of reaching their target. But give or take, if you want to be average and say, okay, we will not even reach that target, then I'll be looking for at least a 60% possibility of reaching that target. And with that 60% possibility, I'll be looking at, say, we draw a fib, measurement, and see how far 60% will get to. Well, 60%, technically should get us right about where we are, though. Bad news. All right. So, but they do have a very strong potential that once they break their resistance, they'll reach their target. So here, I do expect a pushback, as I was saying. This 60% of its rise, it's probably going to push back into this level and then make it way towards this target. And I think this being a resistance area, because right now this resistance level is corresponding to this resistance right here. So, I'm looking at it like, okay, so it's facing the resistance here. Once it breaks this resistance, the next potential resistance is right here, which is the target for the falling wedge. So if the dollar index is going to go up based on the yield rising, I just want us to flip the script and look at the dollar index itself, see whether where we are is an area of support or not, and whether the move up is probably going to happen or not. All right, so let's flip to the dollar index and see how the chart looks like on this same time frame. And here is a 3 month chart also of the dollar index. Getting this one all the way back to 1967 data, which is pretty great. Um, as you can see, in the 80s, the dollar index, as we're looking at it from the yield, as the yield was rising all the way up, the dollar index was also rising. And then when it started declining, the dollar index also declined until 1985 thereabout, okay, where the dollar index rallied up. And then the yield also did rally up within that same time period. I think that was like 1995 all the way down to probably 1993 to 1995, and then also from 1996 onto 2001. So you look at that time frame, 1996 would be somewhere around here onto 2001. The yield was also rising, and then we fell down. The dollar index came back down, found support in 2008, right after, I guess, the financial crisis meltdown. And the dollar index, though we've been in choppy, technically has followed this trend line that we have in here. Now, zoom it up a bit so we see something unique that is happening within this last few years of the dollar index. So ever since we started this move, the dollar index have pulled back to this yellow line, which is my 50-55 EMA, and has held support. And sometimes we did dip below it, but we rallied back up. So we've come to it first time here. This is one, this is two, and we have come to it. This is the third attempt. Now, usually three times, if it fails, then it means it's really going to go down, all right? But we got to look at the evidence whether this is going to hold or this is going to fail. And I think this is going to hold already. As you can see, the month is ending, and we are already chewing the tail of this candle that we started off in the beginning of this year. Should we close the next couple of months above this yellow line? That would be a strong confirmation, similar to what we had here, that we will go up. It doesn't mean we're going to go to a new all-time high. No, I think between here and here, there's a lot of what one would consider as a fair value gap. Okay, so right from this resistance until about here. Okay, in other words, traders didn't have enough participation. The price just swung straight through it. So I think potentially the dollar index, if finds support here in the next couple of months, could make its way somewhere around at least 102. Now let's bring this down to look at something on the indicators. So indicator wise, my cycle is already at cycle low. We haven't completely turned up yet, but if you look here back in 2021, as soon as we did a cycle low and we turned, it gave us a signal to go up. Now here was a mid cycle. We didn't come below the 20. Here we have come below the 20, and we have kind of tilted our head up. We haven't crossed yet. So should the next couple of months present a positive view on the dollar index, I'll be expecting us to go up rather than keep grinding down. One good thing, though, or maybe bad thing in this case, is MACD. So if you look at MACD, MACD is not giving us a signal that the fall is over. All right. So I'm not calling this as done yet. I'm just giving a perspective of a possible roadmap ahead of us, maybe come March thereabout, by which time this candle would have completed its information. RSI wise, on the same time frame, we are just somewhere right around 35, which is not super oversold. And I'll probably say it's kind of bearish, but you know, not too bearish. Okay. So anywhere between the 40 to 50 mark is bearish, but it just says there's some strength. So I think this level could hold, and if this level holds in the next couple of months, then another reason why I think it might be hold is I was looking at my divergence, and I'm observing that there is so here we've made a higher low, okay, and my divergence indicators are telling me that whilst this has made a higher low, indicators are making a lower low. And as you can see on the RSI, so this is your previous RSI level. Okay, let me kind of zoom up on this RSI. So this is your previous low on RSI, all right, and you've made a higher low RSI. Now this technically has not made a lower low, but when I drop it out to this level, probably let me put a line here and see it myself. All right. So when you put a line here, it does correspond to this low. All right. So you realize that for this low that we've had, we are at a higher low, and our indicator is making a lower low. So here is the hidden bull that I'm trying to refer to. Okay, so right here is the hidden bull. If you look again carefully, so here is your previous low. Now you have made a higher low, but then your indicator here made a lower low, and currently you are right about that same lower low. Now this is not confirmed. You get your confirmation in the next couple of months. So everything I'm doing here or presenting here is, as my brother will call, dubious speculation, possibilities, kind of trying to map out the journey where we are now to where we can possibly be going. So take this with a little bit of a grain of salt. It's not perfect science. It's probabilities that we're looking at here. So besides the hidden bull that I just showed, there's another divergence that I also want you to pay attention, and that is the low here versus the low here. So this is our previous low, and we have made a lower low this particular season. And as you can look also on the RSI, so this is your previous low, okay? You went slightly up, and then now you've made a lower low. But if you look at this lower low carefully, maybe I should draw a line, then it can be a little bit clearer. Okay, let's draw a line here and see exactly where we are. Okay, so if you put a line here, this is your previous low. You've made a lower low, and your RSI is right about the same low, but technically slightly a higher low. Now, if should the next couple of months close above that moving average, then definitely this divergence, though little, is confirmed. Okay, between here and here, is confirmed, and that could potentially push the dollar up as we looked at it from the yield perspective. Um, if you step down to the weekly chart, okay, let's step down to the weekly and see what the weekly is looking at. Actually, let's look at the monthly. So if you look at the monthly chart, okay, which is the most nearest chart we can look at, this is the hidden bull that I'm talking about. Then this is the normal divergence, bullish divergence that I'm talking about. So we hoping that this level here would hold, this level that I've marked here. It's an important Fibonacci level, is the 0.78 Fibonacci retrace of the entire move from the low here to the high here. Okay, so this is a 0.71786 zone. It's a very important. If we lose this place, definitely yes. I would expect that the dollar index would fall all the way down to about 89.90, which is the next support zone. But should this level hold, then of course I'm expecting at least a fib retrace from the high to the low, and let's say at least we're doing about what, 50%. Should we do about 50%? This is bringing us exactly to where I was saying that 102.8 could be on our future cards if we looking at the dollar index. Indicators wise, on the monthly, we're not looking good. All right, so the monthly we're not looking good, although there's MACD divergence. So this is your previous MACD low. You've made a lower low, but your MACD currently is showing a higher low. So again, part of the divergence that I was trying to show on the RSI is also on the MACD. Now, why do I think we are not in a good place yet? Because we have a cycle high that has turned. Now, could we then hold sideways? Probably, until we get something like what we had here, where we turned mid-cycle, which means this comes this way and turns. Or possibly, if the next couple of months changes, this blue line you see turning down here is going to turn back up and go and try and go make it all the way to the 80 level on our cycles. So it's not all for certain, but it's a perspective that I want to share. That let's not be too bearish on the dollar, thinking that the dollar is going to collapse. As you can clearly see, it's holding support at the 200 monthly moving average. And until we break below this moving average, you could assume that the dollar index could go up. I think that's about all that I want to share in respect to the dollar index and the yield from this perspective. That the yield is rising on that time frame as we looked at it, and the dollar index potentially would soon follow a rise with it, unless some of the unusual circumstances do happen, whereby the two do not correlate. All right. I think that's about all that I want to conclude this video with. I'll present my weekend forex, crypto, and indices analysis sometime within the course of today or tomorrow. So stay tuned. Please like this video, subscribe to the channel if you haven't already subscribed, and please, drop a comment below the video. It encourages me to know that these deep dives that I'm doing are relevant and people are, really participating or at least collaborating in these analysis. Let it not be just one-sided. Let's collaborate. Let's be a community that master the markets together. I thank you. Have a great trading session today, and look forward to presenting a weekend market review. Cheers. Thank you for unlocking market insights and trade ideas with us. One candle changed everything today. We hope you can already see how today's analysis can transform your trading and investing decisions. If today's breakdown helped you spot opportunities or potential risk you would have missed, consider subscribing to the channel so you never miss an important opportunity or avoid a potential risk. Kindly give the video your support with a like and comment below with your insights. Share the video with a trader or investor you care about. They will thank you when it saves them from a bad trade or a missed investment opportunity. Until the next presentation, keep unlocking profits one candle at a time. Thank you.